This is Profiles in Risk. Hosted by Nick Lamparelli. Every week, we interview those who risk life, limb, fortunes, career, and reputation, and those who work behind the scenes who look to protect and enlighten us about risk. You can find the show notes and other insurance-related content at insnerds.com. That's INSNERDS.com. Now, on to the show.
Welcome to Profiles in Risk. I'm your host, Nick Lamparelli. My co-host today is Tony Cañas. Tony, welcome.
Hey, I am very excited. I said that I would be here more this year, and this is my first appearance, and we're recording this on March 6th. So it's been hard to arrange, but I am very excited to finally be here.
Yeah. Our guest today, which I'm very excited about, is Jeff Arnold. Jeff is the president of RightSure Insurance Group, an independent agency providing insurance in 44 states, and the author of a book, The Art of the Insurance Deal. Jeff, welcome to the show.
Thank you so much. I'm equally as excited to be here. I've been really looking forward to this since we exchanged emails about a month or so. So thanks. Glad to be here.
Yeah, so we connected online, and it was your book that really piqued my interest. So I'm going to get into that, and that's really the subject of this particular recording, is to kind of pull out some kernels, some truths from that, something that I think a lot of our guests would be very interested in. But before we even start that, your agency, let's hear it in your words. What do you do day to day?
Sure. Thanks again so much. So RightSure, like any agency looking to make its stake in today's insurance agency conglomeration, all those that are trying to differentiate themselves, we're kind of for businesses, right? So we are a street-level retail agency. We have retail locations in Arizona and California. We have independent agents who use us for our branding and our markets. And we have joint ventures in 16 different states with mortgage firms, credit unions, and auto dealerships. And then, of course, my favorite, we buy insurance agencies and companies. So if you think about RightSure at the 30,000-foot level, it's 4 different businesses in one.
And it's the last one that is of interest to me. It's why I read the book. It's why I wanted to have you on the show, because I've always had a fascination with folks that bought agencies. It always seems to be done in the dark. You see the announcements. I never know how they get done. I've always been very curious. I've been in insurance for 20 plus years, and I still don't really know like how those things get done. So it's fitting that you're here, because I think a lot of our listeners, Tony included, is also very eager to try to understand the art of the deal, your book, and trying to understand how these things get done.
Yeah, Nick, if you read the book, you'll see that there's a lot of dark rooms, like dark back rooms with a lot of smoke, and a lot of shoulder bending and deals that can't be refused. What is that, the thing from The Godfather? We made him a deal he couldn't refuse.
That's right.
Horses' heads and on pillows and all that. Yeah. It's a really good book.
Yeah.
Thanks, Tony.
Yeah. For those of you that haven't purchased the book, you should buy it just to read those stories. Although I read the book and I don't remember reading any of those. So, Jeff, your first agency purchase, your first agency, how did that all happen?
Yeah, great question. So you have to go back to the 90s, the 1990s, not the 1890s that some of your listeners may think, because I am aged, but not that aged. So it's in the 1990s. And I used to just hold court, right, at Einstein Bagels. A bunch of agency owners would get there and talk, just to do strategy, right? And talk about the burgeoning insurtech scene back in the 90s, right? But in the 1990s, the insurtech scene was really beepers and fax machines, right? Not, not the apps like it is today. And it just happened that a couple of agency principals were looking to sell. We got to talking, and just stumbled my way through the first process, right? It was a learning experience all along the way. But that's how the first one originated, just a conversation in a coffee shop. I am reminiscent of the fact that Lloyd's itself started in a coffee shop, right, at Lloyd's Coffee House. So kind of interesting how those two aligned. And here we are, almost 30 years later. We've been fortunate to take part in about 62 different transactions or agency purchases. Some were insurance companies, some were agencies. And believe me, if there's a way to do it wrong, we've stumbled upon that and found a way to integrate that into all of our deals. So lots of good stories there. But first one, just by accident, just stoked a fire in me that we continue to fan the flames this day.
So how does that happen? Do you pull out your checkbook and you just write a check? I'm sure it's a little bit more complicated than that.
Yeah, absolutely. So in those days, there was no checkbook. I was the product of the Kentucky public school system, so that in itself warrants to you that there was no capital to be had, right? So
Okay,
you do it.
Yeah, so that's exactly where I want to go, because you and I had this conversation, and the idea is that like a house or like a car, you usually don't pay in cash, so there has to be creative ways to try to do that. So I know this isn't necessarily the way that you do it, but would you go to a bank? Would you, where do you find the capital?
Yeah, great. So the first thing to think about for any of your listeners who may be engaged in this process, right? Oh, I want to buy an agency here, I want to buy my apartment out, or what have you. There are as many creative ways to finance these as you can imagine. So you could just start the laundry list. Some of them, the smaller ones, can be done on credit cards. Some of them to the friends and family model. Some of them are to the owner carry. Some of them are to banks. Some are to factoring firms. Some are to insurance companies. If you've got a large holding of policies in one, they want to hold on to that. Companies have programs for you there. Typically, the way we do it now, that we've been fortunate to be established a while, is we have relationships with some hedge funds, with some factoring firms, with some banks that specialize or focus in this space. You should also be aware, though, that no two deals are alike. You can't just fit it all in a template. And if you're thinking of buying, you should really ask the seller what they have in mind and what they have envisioned, because if you go to them with your template, you're going to put them off, right? So this is their child. They have given birth to this agency over the years. They've coddled it. They are in control of it. Very difficult for them to let it go. Much more difficult to let it go 100% beholden to your terms, right? So one of the first things you want to do is just ask the question, what is it that you want? Not just from a dollar amount, but what do you envision? And then once you get aligned there, then you can start talking about how you're going to fund the deal. I would say that the last 15 or so agencies that we've been fortunate to purchase, none of those, zero, have been 100% cash up front. Right? Most firms funding these days want the owner to still have skin in the game, or more importantly, right of offset. If something surprises them in the post-purchase experience, they want the ability to have the right of offset for an E&O exposure or deductible or some type of earned premium issue. So typically the way they're structured now, then this is just the RightSure way, other firms could do it different, is we will engage with the seller. What are you thinking? If these terms make sense to you with our letter of intent, then let's talk about funding the transaction. A lot of the deals are structured differently, and the last 15 deals that we've been fortunate to be part of, is the majority of them, we're funding 50% of the purchase price. The seller will carry 25%, and then we may put 25% in an escrow account for the end of 180 days or 365 days, just to make sure the transaction is as everyone stated, right? There are a multitude of ways to do this. If you go without the funding route, some sellers have actually funded their retirement in full. Their homes are paid for. They just want a steady, annuitized stream of income. And so theirs may be, and this has happened multiple times, this is the amount we agreed upon. I would like this annuitized stream over 48, 60, 72 months. So it really just becomes a question of trust more than anything, right? And so anytime you're in a relationship with a seller, if you have their trust, they're open to different terms, right? Every relationship comes down to these two things, suspicion versus trust. And there's always that dichotomy, right? And so it's always, I really want to sell this, but I have suspicions about, am I getting all my money? And that's fair. And this is the child that they gave birth to. If you can eliminate those suspicions and replace it with trust, you found a good partner to do business with, you found a good agency to buy. So a lot of it just comes down to that. And then the funding sources really for us take care of themselves. But if you're new to this, I would say, definitely start seeking those firms that do it. I could give you a list of them. Contact me via the website of firms that specialize in this.
How did you do your first deal?
Credit card and IOUs, right? So an exorbitant usury interest rate for the cash up front. Well, I said credit card singular or plural. I meant multiple. Right?
Wow. Okay,
it's so fun to know.
I would like to go off on a tangent.
Sure.
Just a little bit here. That's risky.
Absolutely.
How confident were you in doing this deal, and when you look back, were you foolish?
Well, nothing ventured, nothing gained. Foolish, I are, right? So definitely, look, that first deal was fraught with mistakes, errors, omissions, anything that you can do wrong. We typically did. We're lucky to be here, right? Looking back, yeah, it was a dumb business move, but great for, just the young kid buying his first agency, and you learn from it, right? Luckily, you're young enough, not enough commitments and family responsibilities for at the time that I could have overcome it, right? So kind of luck.
So I'm assuming that the first deal, even though you made a lot of mistakes, did well enough that you were able to pay back the credit cards.
Yeah, absolutely. Whet the appetite that said, okay, this is how we do this. I had to make some definite difficult decisions on, staff, obviously, right? Because some of I don't want to go too deep into the book, but if you dig into that chapter, it's, we overpaid for that. I overpaid for that. I made some mistakes, and so we had to make some difficult decisions on cutting staff, and that's not our model. Our model isn't buy and reduce their staff to gain the extra cash flow. That's not how we do things. Some people do that, not our model. We had to do it that time. But yeah, we came out on the other side. Yes, we paid it off. We made good with any premiums that they owed to the insurance companies. And here we are. So
I've got to say, I'm currently reading Nassim Taleb's newest book called Skin in the Game, and it's all about making sure that people have skin in the things that they participate in. Buying an insurance agency on credit cards, that is what I call skin in the game. I would have bet money on the fact that you would be successful, because if you weren't to do that, that you're going to give it your all.
Yeah,
so
absolutely
impressive.
Agreed. Well, thanks. Yeah, it's when your back's against the wall, right? So yeah.
So how do you find opportunities? There are thousands of agencies. I wouldn't even know where to begin to look to figure out if there was some 70-year-old person that wanted to sell their agency. Where do you even start?
Yeah, thanks, Nick. I'm glad you brought the age thing up too, because the book itself, The Art of the Insurance Deal, the entire cover, the outline, the way it reads like a sophomore term paper is by design and intentional, because the target market is 55-year-old to 74-year-old males. Sorry, right? That own agencies, some females, but the majority of it is males, right? That own agencies, and that's why it's a simple, easy read. No disrespect, but they're busy, right? Last thing you want to do is read a book. The cover's a scroll of paper to kind of talk to them, and that's who it's for. So it was designed to engage that set of people, 55 to 74-year-olds, not baby boomers, as Tony would refer to in the opposite of his books, right? Not millennials, but baby boomers, that are thinking about it. And so that's where we find them now. Fortunately, after almost 30 years in doing this, we do kind of have a reputation of anyone looking to sell to kind of talk to us, get an offer. We're not successful at all of them, but the short answer to your question is the book has been wonderful in just making the phone ring. And then it's other agencies that we've purchased. It's just like you hear in every agency that you talk to. How do you get business? By referrals. And so a large part of ours are agency sellers who we are fortunate enough to purchase who refer other sellers to us.
With your exception, so really, with your exception, most people that buy and sell agencies are not in the business of buying and selling agencies. They're in the business of, I'm ready to retire, so I'm going to sell my agency.
Yeah, I completely agree. It's not maybe their passion or one of their business models. It's one of our 4 business models, like we discussed earlier. Most of them have come to a realization that, what's my perpetuation plan? My son or my daughter or my family member is not involved, doesn't want to be, and there might not be an ESOP option to sell it to my employees. I may want a chunk of change or cash, or I definitely want a guarantee of my revenue stream. So who do I go to? There are more and more, but an agency with 500,000 to $1 million in revenue doesn't really want to do business with a $800 million, $1 billion aggregator of companies. They want that relationship, and that's the niche that we fit. We're not trying to be the biggest player on the block. We're just a small niche boutique operation that buys agencies that make sense with us.
I really enjoyed the explanation in the book on buying niche agencies. I thought that was fantastic advice, and I've never worked in the agency world, but everything I've read is that niche agents are more successful. And your logic on why and how to analyze an agency's niche, I thought would be really, really useful for somebody looking to buy an agency.
Oh, great, thanks. Take a couple minutes if you want. Talk about it.
Why is niching important?
Yeah, great question. So I just found that I don't have the checkbook to compete with the Geicos and the Progressives and the Liberty Mutuals and the Esurances of the world, right? And so we had to, I know everyone hates this word, but look, you have to embrace it. We had to discriminate, right? And we had to discriminate with our dollars in our checkbook and say, what can we do better than anyone, or what market share can we capture that no one wants, right? And that could be trucking, that could be doctor's offices. In our case, it was, we focused on really micro niche exercise fitness studios, even micro niche of Vespas, right? So Insure My Vespa was born, and we added 1,000 Vespas because no one is wanting to chase these $70 and $90 premiums, right? But we added 1,000 of these really quickly. Then we migrated upstream a little bit to motorcycles, fortunate enough to add 5,000 motorcycle policies to the book. And so part through acquisition, part through just focusing on insuremymotorcycle.com or quoteByRide.com, different web properties that we would set up just to be real micro niche. We currently have 20 different web properties. All of them are niche related, that we're just trying to focus on markets that are too small a premium for the big players to get engaged in, but just right for us, right? Because they do have a bigger checkbook. They don't have to discriminate much, so they can do this shotgun approach. We have to do this sniper approach with our resources. So that's the whole niche thing as we see it anyway.
That's genius. I'm familiar with Insure by Vespa. I had a Vespa for a while. It's a fantastic approach.
Cool, thanks.
That's really interesting. So the same strategy would probably work on the MGA side too.
Absolutely agree.
Yeah.
And you're seeing it actually without listing all the carriers that are entering into this. You're really seeing this foray or this push into the hazard or the home insurance market, right? Trying to disrupt that. More niche, like handyman insurance stuff is really popping up. So just a whole bunch of MGAs focusing on marine insurance, long haul trucking, where they're really trying to be uber niche, for lack of a better word, just so they can get that first place position. Because at the end of the day, we're all trying to get to that first, second, or third place organic setting or position in Google, right? That's what so much of us are trying to do. I have a small army of bloggers here every week, 5 that are just trying to get these keywords moved up on Google or Bing or DuckDuckGo or whatever search engine we're trying to move up on.
So really, you're a digital play. You're right.
Yeah.
This is in InsurTech before the word was even coined.
Yeah, I don't know that we're a digital play because we aren't surrounded with programmers, but bloggers we have aplenty, right?
But
So
but but you had just described how important it was. I mean, really, because it's a niche, you need the web to be able to reach people. And without the web, like your distribution costs would just be just too difficult, too overwhelming for you to be able to, $70, $80 Vespa premiums. How do you get those if you don't have like very, very low acquisition costs via the web? So it is a tech play.
yeah, I would covet the idea that we are a tech agency or part on the forefront of tech insurance, but we because we're an agency, we have the word insurance group in our name. We become kind of put out in this other side about in the agency space. But
Sure.
yeah, my dreams are in the tech way and embracing digital in all aspects in everything we do. As a matter of fact, every agency, whether they know it or not, are in the tech space, right? On one of my blogs is called "I Am InsurTech," and so are you, right? InsurTech has, in my short career in insurance, has gone through three phases, right? In the beginning, I think we talked about a little. It was just beepers and cell phones and the ability, oh my God, to fax from a laptop. That was InsurTech in the 90s, man. I mean, you were the cutting edge InsurTech, right? And then mid 2002 to 2005, it was really about comparative raters and a website. That was InsurTech. But now it's just evolving like it should. It just has a really cool, sexy word around it now called InsurTech. But you've always been InsurTech, and I've always been InsurTech. We just now have a cool word behind us. So that's, I think we're just in the third phase of InsurTechness.
That's going to be the
I
title.
love the
That's going to be the title of this podcast. You've always been InsurTech, and I've always been InsurTech.
I am InsurTech, and so are you.
I love the story from the book of how a lot of this got started was that you were one of the only agents because you were young enough that knew how to fax from a laptop, and that they were impressed and kind of thought of you as the IT guru for that. I really connect with that because I've had little things like that have opened big doors for me.
Yeah.
And it is truly amazing how being the one person that understands something, regardless of how small it is, if you know how to leverage it, can make big opportunities.
It's true, right? Small things open big doors sometimes, right? It's kind of neat. It opened lots of doors in banks and credit unions for us. So yeah, thanks for that. You're right.
Yeah, what surprised me, both in the book and in your opening, I kept forgetting this because I keep thinking you as a person who buys and sells agencies, but you said insurance companies,
Yeah.
and I've researched that. Those are capital intensive entities. You can't do those on a credit card,
True.
or you would need like 10,000 of them in order to pull something like that off. So could you talk about that one a little bit?
Yeah.
Maybe like your first insurance company and kind of how you went about acquiring it and financing for it.
Yeah, so luckily that was a smaller MGA, right, which gets lumped in as companies a lot of times. So it was just a smaller MGA that was, here we go, a niche again in Mexican auto insurance, right? So we were in 6 states in the Southwest, just focusing on Mexican auto. They were ready to retire. This was, man, this has got to be late 90s, and literally apps were sent in via fax, not uploaded or anything, right? And so we just had to raise some capital with a couple different folks, different financial firms, some insurance companies, when you used to be able to present deals to them to get that funded. And then more recently, on a much larger company, we had to raise close to $100 million. That was not successful. We got halfway there, and then things kind of grayed around the edges. I kind of backed out by choice and by design too, right? It just was going a different direction we want. So bigger the company is, kind of the more funding resources are available, right? Because it's all about the balance sheet and cash flow, right? The balance sheet has enough assets to offset, the liabilities, and there's enough cash flow there. And the person now at the head of it isn't going to run it into the ground or just take all the cash out of the company for their own lifestyle. Banks can get behind that.
How much do you when you acquire a business, whether agency or carrier or MGA, a lot of it sounds as though you're trying to absorb it into the fold, but you did bring up, leadership. So how many of these do you buy that you kind of just leave alone? It's good the way it is. We don't need to touch it, like a Warren Buffett approach.
Yeah, I are no Warren Buffett, but yeah, there's way more commas and zeros there than little me. But I'll take I'll take it. So that goes back to the very beginning. You have this real dialogue with the seller and say, "What's your vision?" Right? Or what's the synchronicity between us? Is it, all the digital resources we bring? Is it the blogging? Is it the back end? Is it our call center? Is it our screen pops when the customer calls in so the data's right there, we can handle it right away? Is that what you're trying to solve? Or are you trying to step out and retire? Or do you think that hitching your wagon to our train will really make you go fast? That's the conversation you have to have. And so the answer to your question is all of the above. Some are just ready to leave, but some are like, look, I really just want to tap into the call center because I never want to have to answer another question about billing inquiry, payment, endorsement, or claim. I just want to sell. And so in those agencies, we may just take the agency principal and the book of business. It could be that the agency principal just wants out, so we'll take his service staff or her service staff, roll them into our technology so they can telecommute or work from wherever they're at and just get engaged in our policy services operation. So it just really goes back to that beginning conversation to not approach that seller with a template about what you want, but to ask pointed open questions about what is it that you see.
So the deals that have gone wrong or where there have been missteps in your experience, educate the listener, someone such as myself that might be interested in doing something like this. Where are the mines buried?
So the short word, in your ego, right? So the deals that I wanted to do really, really bad, right? I suppress all the due diligence checklist, I suppress reason, and my ego's like, I really need this deal, right? It's just, it's the whole ego thing. And so typically if we, look back and see the deals that I really messed up on, I skipped all my steps, the ego got involved, and I let emotion drive the deal instead of numbers. So numbers have to drive the deal, not emotion. And every single one of these that went wrong were pretty much, sadly, ego and emotion driven. So that's just my takeaway. Now, do I always adhere to that? No, because just 2 years ago, I repeated the same mistake that I've done before in an effort to help someone quickly. I didn't do my due diligence, and I'm presented with, talk a little bit about in the book, this nice little visit from the Internal Revenue Service. Says it wasn't even their agency to sell, they owe the IRS, so here, you want to pay this? And so even the most experienced, which I can say I am at this point in my life, we make mistakes all the time.
I have an important question. What does it feel like? Kind of walk us through the feelings, because I hope I never get to experience this in person. What does it feel like to be sued for $1 billion?
I have a ring in my ear. Do you guys hear that? What does it feel like to be sued for $1 billion? So can I?
$1 billion.
$1 billion. Well, first of all, I don't wish this upon my worst enemy, but I will try to paint an image about what it was like, if that's okay. So I'm literally at a resort meeting, trying to acquire another agency, and my office called and said, "Hey, you were just served some papers here." I'm like, that's probably a claim or whatever. Go ahead and open it. So she opens it and she says, literally, you're being sued for 3 times $340 million. I'm like, that's $1 billion, right? So, and I'm thinking, this is crazy. No one can even imagine this. You lose all faculties, right? I mean, you don't sleep, first of all, you're right. It's like, okay, at the time I had 4 children, I only have 4 children now, but I mean, I have 4 children. And I was like, oh, am I ever going to be able to raise them? What about the beds they're sleeping in? What about the car? Are we going to forfeit all of this? And so, it took 2.5 years to wind through that mess, that very expensive mess, and basically forfeited most that I had earned in my life. But the short answer is, it is terrifying, right? Especially if you just get caught up in something that some overzealous, trustee has made false accusations of you, and you still got to go through the court process. So it's terrifying, and cash draining, right? And sleep depriving. So yeah, no fun.
So at the end, you were able to win the trial, but just defending yourself was that horribly expensive, basically.
Yeah. Oh, absolutely. Right. It's just it was years and years of legal fees. Right. That is just exhausting to even talk about now. Right. And I don't wish that on anyone. It wasn't just me. There were a bunch of folks, and so.
I'm sorry for bringing it up, but it is
No,
an
it's
incredible story.
Yeah,
no, it's fine. I just we're good. Thanks for bringing it up, actually. But it's
I
good
think-
to reminisce about it. But I don't want to revisit it in person.
Yeah, I think Tony just wanted to do his own. What's that guy?
Dr. Evil.
Dr.
It's
Evil.
Dr.
impression.
Evil.
Yes.
1 billion with the B.
Yeah, way to squeeze that in, Tony. Jeff, there must be, concern when you acquire an agency, especially from the employees on the other side. You said it's not your business model, but that's still, if I were on the other side and something like that happened, I would be concerned. What do you, when you or one of your representatives steps in post-purchase, what do you say to the new employees to make sure that they're not, faxing or emailing their resume out to the nearest recruiter like Tony?
Yeah, absolutely. So first thing you do is you re-recruit your keepers. So you got to find out, are they all keepers? And hopefully yes, because as Tony's book, talks about all the time, this is an industry that is rapidly losing talent, right? You have to find a way, if they know something, to keep them. So you re-recruit your keepers. Newsflash, most of them are keepers, right? I mean, we need the resources, we need the people. And then, so typically, if we can do it in person, we will. I like to be involved because I like to do the old trust versus suspicion. You don't know us. If you do, you may have heard some bad, some good. Let's remove the suspicion and let you trust us. Ask us anything you want. I can tell you this with, being quite candid, there will be change, right? There will be technology changes. We don't do paper. We don't do anything but e-sign. 96% of our clients sign on a mobile phone. So you have to embrace that mobile environment, right? We keep credit card numbers lying around. You got to use our system to answer the call and bring up the client info there, so we can do a screenshot and record the calls and attach it to the file. So that's change, and that scares some people, older people more than younger people. But you have to be real about that. You have to have that trust versus suspicion talk, and then you have to say at the end of the day, we want you. Please stay. We want you to be with us, not just this year, but next year on until you retire. Take advantage of our retirement plan. Even though you make that speech, it still takes time. They have to all individually come to that level of trust with you, right? And there's 3 different layers of people in most organizations. Those are those who are the early adopters, and they will run and embrace your technology and embrace you. And there are the others who will just stand on the sidelines and see what everyone else is going to do and maybe second. And there are those who will fold their arms and dig their high heels in and not embrace any type of change and validate every reason why this is wrong. And so they're in every organization, all 3 of them, and you have to address all 3 of those in a way that hits home with them. So it's a long-winded answer, but that's how I dig into it with every single one of these.
I mean, it's critically important. As you said, we're already hurting for talent. So anyone that leaves is just going to add an additional expense burden on you to try to fill that position. That's a problem.
I think, can I take a second to talk about Tony's book here and kind of what I've, as I'm driving, I wrap my mind around that.
His head is already too big. Let's be very careful here.
Be careful.
It is not complimentary.
We end up with a 3-hour podcast.
It isn't
This is how we end
complimentary.
up with a 3-hour. Okay, go.
No.
Okay, go ahead.
No, I think as I'm talking to colleges and local community colleges and high schools too, trying to recruit millennials, right? And so as I'm thinking about placing a new book to talk about them, I have woven this into my conversations with them, because if you go to them with insurance, man, their eyes are rolling and they're bored and they're checked out, right? They're gone. So I've just woven this into my speech. It's like, look, we exist in an industry where you can be anybody you want to be. Because if you want to be a lawyer, guess what? That's our business. We sell legal contracts, man. That's all we do, Jack. We sell legal contracts. If you want to be a detective, because policyholders can be one of three things: a lying liar who lies, right? Sorry, that's what they can be, right? So if you want to be a detective, you could be in insurance. If you think you want to be a teacher, man, these people need to be educated more than you could ever imagine, right? So you can teach in insurance. And on down the line, you want to be a financial advisor, man, these people need to be told what's best for them and what insurance they should buy. So when I'm talking to millennials or in high schools or colleges, I say, forget insurance. Think about a technology forward-facing industry where you can be anybody you want to be. And it's an industry that's full of all things sexy, exciting, and just plain awesome. So join the insurance industry.
I love the sexy, exciting, and all things awesome. You say that in the book several times, and you make it clear that it's been kind of the motto of your career. I love it. And I agree. I agree completely. One of my favorite articles that we've ever ran is Nick's first article, which is our first on the Why I Love Insurance series, where he talks about how in his insurance career he's been a gambler, a detective, like a whole bunch of different things he's done, and it's so true.
I'm going to read this.
Regardless of what you're into, regardless, and Nick included in the notes. Regardless of what you're into, there is a career for you here. And I just a couple of days ago, or maybe a week ago, I read an article called "Helping Others Turn Genuine Passion into Insurance Careers," where I talk about something very similar, which is regardless of what they're into. And I love the example of the aviation underwriter. If you meet a kid who wants to be a pilot, and then he ends up not making it into a pilot for bad vision or whatever reason, that's a perfect aviation underwriter. That's not an entry-level job. So we need to get him there, and that takes a few years. But once we do, he's going to love that job. And that goes for whatever your interest is. Somebody has to insure it.
No, it's true. So, very valid point.
Thank you.
No, it's great info. Please put that in there, Nick. I want to read that, or whoever sends that out. I would love to read that article.
I will put that in the show notes. And it was detective, gambler, scientist, salesperson. Yeah, there was a lot of stuff. I've done a lot of things. And you're right.
I have plagiarized yours and made it my own, and thank you. Unknowingly, but
that's fine. And now I will reap the credit for that. So that's perfectly fine. So Jeff, you don't only just buy agencies, you sell them. What would entice you to sell an agency?
Yeah, so sometimes, here's that bad word again, we discriminate. Right? It just doesn't fit, right? It's maybe a whole bunch of markets that we don't have. It's in a marketplace we don't have. We're not big in the Northeast, don't understand the markets, don't understand the environment. And so they may call me or go to my website and say, well, look, we just need some guidance or directions. And so it's really just kind of from a consultant thing, making sure that we walk them through the process of, what's the best way and, what's the easiest way to get the most for your book, and then give them multiple different ways to how it should be valued. You can't just step into a multiple of income or a multiple of EBITDA or a multiple of commissions, right? There's so many different ways to put a valuation on this book, from where you're at in the marketplace, where you're at on the street versus others, and then what's your penetration by carrier, right? All this impacts the multiple or the factor that your agency is worth. And so if they've never sold and it's not really a good fit for us, we'll say, well, we will walk with you hand in hand, and this is what our fee is, which is super reasonable, just to make sure the deal's done. And when you have a buyer, if we can help you find a buyer, we'll tell you what all this process looks like, and hopefully make it a smooth, easy process for everyone.
I was super impressed. You're an agency buyer most of the time, so I was super impressed that your book makes it very clear. It gives great negotiating advice to the people who might be negotiating against you, right? Don't say a number right away. Wait until they come back to you. They do this often, so they know better than you. They might come back with a higher number than you were thinking. And then if that's the case, take your number to your grave. Like you're giving great negotiating advice, and that's fantastic. That's going to leave a legacy.
Thanks. That's the trust versus
fantastic.
suspicion. Thanks so much, Tony. I appreciate that. That's where, again, we're not the $500 million or $1 billion organization that's just gobbling up 80, 90, 100 a year. We'll do 12 to 15 a year on a great year. And this is why you can trust us. This is full transparency, right? So yeah, thanks. I appreciate that.
Okay, well, this is where we transition to the more personal part of the show. We like to get some insights from the guests. We have an audience that is hungry for that kind of knowledge. So first off, we ask every guest, what tools or techniques do you use to stay productive?
I'm a LinkedIn junkie, man. I try to see everyone is doing and then copy and paste. And so look, I mean, you always have to be sharpening your own saw, right? Mentally, physically. Personally, I'll start every morning with my dashboard. I have 92 reports, so I start my morning in the office, 5:30, 6 in the morning, going through the dashboards of the day's prior numbers. After that, I'll commit to just not social media, because I'm not a big social media person, but I live on LinkedIn, and so I'll read about industry things going on in LinkedIn. And you see Tony every day on LinkedIn, so it's some kind of post. But I drill down and go to all the industry publications too. I've got just a bookmark on my Internet Explorer and Google Chrome of all the industry publications that I try to hit every week, just to hit the headlines and make sure. And of course, I get inbound emails on venture capital funding or hours that talk about transactions going on in the space. Other than that, it's reading like everyone, right? If you want to be successful, you always have to be sharpening your mind and putting data into it. So I live on LinkedIn and reading books.
Okay, well, let's get to the books. What books, first, besides your book, what book would you recommend for someone that was interested in doing what it is that you do?
So I give you my books, but everyone else is on a different path, right? And so it's where you may start at a higher level than I was. I joke all the time, I was the product of the Kentucky public school system, so I had to start at simple stuff, right? So I had to graduate to stuff like Adam Smith and economics, right? So I did simple stuff like Napoleon Hill stuff and Brian Tracy, Wayne Dyer, like build the inside first, right? Get right on the inside and the mind first. But I think there are two books that come to mind. So the first one is I had the sheer luck and good fortune in 1994, maybe early 95, to find a book by Michael Gerber called The E-Myth, Why Most Businesses Don't Work and What to Do About It. All right. I read that 4 or 5 times, and all the subsequent books, E-Myth Mastery, E-Myth Modules. And so that was the turning point, because it showed me, that's what I needed at that point, maybe not for everyone else, is I need to stop doing it. I have to stop making it, packing it, shipping it if we want to move along. And in fact, in 1996, I did that. I stopped quoting policies in 1996, right? Now, we're in the insurance business. I'm a licensed agent, but I stopped quoting policies in 1996 because I couldn't do the quoting, answer billing questions, endorsement questions, and keep my foot on the gas pedal growing and buying agencies. So that was a difficult thing to do, but I stopped. And where I got that was from Michael Gerber's The E-Myth, Why Most Businesses Don't Work and What to Do About It. That was one. Most recently, I reread Good to Great again. I don't know if you've read Good to Great. If you haven't read it, I highly recommend it. If you have, I relate the part where he's talking about you need the canisters of air to get to the top of Mount Kilimanjaro, right? You have to, discriminate or ration your air so you have enough to get to the top. Well, I equate that with cash. We want to buy a lot of agencies, but we have to keep enough cash on hand to get to the end of the year and to make all of our payments, whatever. So I equate air with cash. So we're really, really conservative with our cash, just like you have to be climbing a mountain with air. You don't want to get to the top and run out of air. You don't want to get to the end of the year and have the opportunity to buy 4 or 5 more agencies and run out of cash. So there are a whole bunch of other symbolism you could equate to our business, but Good to Great is one that I just reread again.
Both great books. The E-Myth was one of the first books I read that really changed my mind about how businesses were supposed to be run. And I remember handing it to my sister-in-law, who was working with my brother to create a salon and day spa in New Hampshire. And she returned it, and she's just like, I'm just going to have to buy you a new one. Because she had it all rabbit-eared and sticky notes and notes in the margin. And she took that to heart. And she had made that organization, her and my brother, into like super dynamic business. Like, exactly the way that you were doing with insurance. They had to make those hard decisions, but a lot of it was, processes and making sure that, you have the right staff doing the right things, and you can't do everything, and so on and so forth. That I love that book. That's just for those that have never read it, it's a story. It's not a lecture on how to run a small business. It's a story, and from within the story, you can really capture that. So I'll put that on the show notes. How can people reach you?
It's simple. The website is jeffarnold.com, jeffarnold.com.
Tony, any parting thoughts?
It's just been very fun to have you. When I read the book just in the last couple of days, I have a lot of travel this week, so it was really nice to have it. And like I said, I've never worked in an agency, so it was very interesting to get a kind of a look behind the curtain of the agency world. And you kind of had me hooked with your saying, which I can't remember right now, of how incredible insurance is, because that's exactly how I feel. And to be honest, I always struggle selling younger professionals on the idea of working in the agency world. So your book gave me a better perspective of what that looks like. So just thank you very much. We hope to have you appear on the podcast again, write some articles for us. We're here for you. So just let us know how we can amplify your message. And it's been a pleasure. I'm glad that this was the one I was able to make out of the last 14 recordings of the podcast.
Awesome. Hey, Tony, it was great talking to you. Nick, thanks so much for inviting me. I'm super grateful. Looking forward to reading that article that I have plagiarized you for and did not know about it. So, but hey, this has been fun, guys. Thank you. I've been a bit too talkative. My apologies, but it's just been a blast.
Our guest this week has been Jeff Arnold of RightSure. Jeff, you are welcome on this podcast anytime.